Joining us now for our marketing roundtables, we have Peter Meyer of S&P Global Commodity Insights, as well as Tregg Cronin, who is a grain farmer as well as a grain analyst. All right, Pete, start us off. Big announcement from the White House this week asking Congress for more aid for Ukraine, but there are some other announcements possibly tied to that, including increasing commodity loan rates for 2 years, some other things that to incentivize producers maybe to grow more wheat and soybeans and other crops like that. But at the end of the day, are we running out of some of these commodities?
No, I mean, I don't think so. But I think when we look at what's happening in Ukraine, and the longer that the situation in Ukraine drags on, what we do is we've created an underlying support for the market until such time where we can balance supply and demand. And in our opinion, that probably lasts 2 or 3 years, because this is not a 1-year phenomenon what's happening in Ukraine. As sad and unfortunate a situation as it is, we also have a tremendous amount of reconstruction that has to go on there. So we think that what that equates to is probably 2 or 3 years of very, very supportive markets. That's not necessarily just bull run markets, but we can easily make a fundamental case for a base price of $6 corn and $15 beans until such time when the veg oil situation, as well as the corn situation and wheat situation out of Ukraine, get stabilized.
Well, Tregg, speaking of that, it's that situation that prompted the White House, to call for this. But when you see the government intervene this early on in the season, what type of unintended consequences can it actually create in commodity markets?
Yeah, great point, Tyne. I mean, I think the headline number of $400-500 million, whatever the total package ends up being, grabbed a lot of attention. But now that we've seen some details start to trickle out, I guess I'm a little bit skeptical that it's going to result in a flood of extra grain production that some might think out of the White House. So what's important to realize too is that we're sitting here just calendar's just about to turn to May. So there's limited things that farmers can do at this stage, and so much is weather dependent. To really ramp up production to the degree that many think is necessary. So of the details I've seen, I think that the impact is in terms of increased production is going to be somewhat limited. And to Pete's point, I think that this is the market's doing its job of incentivizing additional production. I don't know that these measures from the White House are going to do anything that the board prices are not doing on their own. So and any time, as you kind of suggested, we get a big government program thrown out, the unintended consequences piece of it probably is going to play more so than the additional bushels that we might be able to count on.
Well,
one thing I would add, Tyne, is that when you throw money, you can't fight inflation by printing more money. And when you throw money at the farmer, I mean, the unintended consequences, in my opinion, would be continued high input prices. I mean, the seed guys did not participate in this rally because they set their prices in the fall. You start throwing more money at the farmer or at the ag sector, certainly your prices for inputs are not going down.
Well, at the same time, Tregg mentioned that really farmers are incentivized to plant this year when you look at prices. So prevent plant may not even be in the picture for some of those areas that are getting moisture.
When you look back over history, and in these years where North Dakota doesn't really get in the field until the middle of May, we've had several over the last 20 years. And in those years, we've seen 800,000 to 2 million acres of prevent plant pretty commonly. But I think that this year, there have been some rule changes with RMA with regard to haying and grazing. And the board prices, they're higher than they've ever been, at this stage of the spring. And so every incentive is there to plant. And so whether that happens a week from now or it happens in the middle of June, I don't think we're going to have a lot of fallow acres in North Dakota. But the patterns, there's no question between the snowfall the last couple of weeks and the rain that we're getting in the Dakotas today and this weekend. We're several weeks out from a lot of progress in North Dakota specifically. So I think you could see a big shift there from spring wheat to corn. If it gets later than that, corn to soybeans. If it gets later than that, then maybe we're soybeans into sunflowers. But there are options yet, but spring wheat could be the big loser here.
All right, we need to take a quick break, and then we have a lot more to talk about when we come back.